and this part of this evening where we are introducing and welcoming you here. We would also like rest of our community to know. So I will also be sharing this bit on our Facebook page. Okay, Garima, I think we can pull this one down.
Sure. You want to start, Sheetal?
Yes, definitely. So warm welcome and to everyone here, and I am so thrilled. I am also nervous. I don't know what I would do if I meet you in person, but that only means that we have huge respect for the knowledge that we have acquired from your book and making it so accessible for women. And so thank you so much, Monika, for gracing us again. This, like Garima said, this is our second time with you, and perhaps in every time we pick up this book, we will think of you and then keep inviting you to inspire women. So I, on behalf of the Women on Wealth community and the WOW Book Club, welcome you this evening. We're really looking forward to all the insights and the guidance that you have to share. And one thing that I would like to really let you know of is that every time our community has read your book, and most of our community members, they do the financial course, the Money Gym program, and when they have read this book, they have found it to be really reassuring that yes, whatever I have learned, whatever I am implementing in my life, Monika, as an industry expert, someone who has been doing this for years, she also, in her words, reassures all the readers about the steps they're taking in their lives. And as we grow as investors, as learners on this journey, we continue to discover new things. We continue to, have questions, therefore, and which is where I think moments like these, when we get to really interact with someone like you, and also the fact that you are a woman, and we were really excited that this is a book that's written in the Indian context and written by a woman. It's even more exciting, and we are really eager to ask you all the questions that we have this evening. But before that, I would also welcome you to share a little more about you, your journey, and then we will carry on with the rest of the evening with all the questions. So welcoming you, Monika, to share a few words about you and how you feel being here with all the women investors of our community.
Thank you, Sheetal. Thank you so much. And wonderful to be in a room full of women who are interested in finance and are actually doing something about it. So it's my personal delight. Like I always say, there are two things I like to talk about. I like to talk about money, and then I like to talk about women in money. Okay, so this is pretty much my most favorite time of the, what I like to do. And you've said that all of you have found the book useful. That's the feedback I have had from a lot of people who have bought the book, men, but then they have also started to gift it to the women in their family, the wives, the sisters, the daughters. And for me, that seems like a win, because you know what? This book was not written for women. I will definitely write a separate book for women, because there are boxes I've not opened about women and money, and how, especially when it comes to assets, we are really left behind in terms of asset creation. I haven't even touched the lack of time that women have when it comes to taking control of money, because like I say, all women work. Some women work both inside and outside the house, but all women work at home. So when you're actually balancing two things, which is working inside and outside the home, so it's extremely difficult to manage everything with the children and the work pressures, a fair bit of socializing, extended family issues. The one job that the man is usually happy to take on is that of money management. A lot of people share that, women will share with me that it isn't as if the running of the household or the parent-teacher meeting or taking an off when somebody's ill at home, that part is not shared so well. But the taking over of all big ticket money decisions, not when the decision is in thousands, but when the decision is in lakhs and long term, those decisions are given away simply because there's no time. And that's the one thing that most men in families are happy to take on, because there is a traditional role play that men will look after the big ticket decisions when it comes to money. So, like I said, it is extremely important for women, like I say, to put on your money oxygen mask. So share some other jobs, let the laundry not get done for 2 days. But find the time to empower yourselves with money. And it is a personal delight that women have found it so easy to onboard finance through Let's Talk Money. And the one thing that I was very careful about as I wrote the book, as I have been in all of my writing, is I don't like to talk down to my audience. And that's a very, I find, a male thing, that, oh, you don't know PE ratio. Oh, you don't know derivatives. Oh, FNO is the smart thing. There's a whole talking down using jargon. And I feel you display more of your lack of knowledge when you start to use jargon. So you really have to know it well not to use jargon. And then when you realize that it's not that difficult, because when you take the time to explain it the way it should be, it does become accessible. So it is, I'm deeply grateful that, you all have loved the book so much and have responded to me in a million ways. And all of those inputs will go into, in the future. The next book is on mutual funds. I think HarperCollins will release it in June this year. But the book of money for Indian women is still waiting to be done. And I completely love to hear your stories, and it enriches my own work around writing, speaking, doing shows around money. So just happy to answer your questions, and tell me what you liked about the book. Tell me what else you would like to read. What are areas specific to women that, an audience like yourself, which is already on that path.
Thank you so much. And we're really excited to know that there are more books coming along, and you are particularly also thinking about women and to write more about, in that arena. So I would like to invite Garima to start with the questions that we already have received from our readers.
Thank you so much, Sheetal. And ma'am, I just want to say one thing. I know, I mean, I'm not a journalist here, so the questions will come in whatever shape and form they have been asked. So this is again a no judgment issue. And first of all, thank you so much for acknowledging a couple of things that you mentioned about time, because that's something I think we do not acknowledge it for women. We are expected to just have time always. And I seem to always struggle personally, and I'm sure everybody else here as well. So thank you so much for acknowledging that. And also you mentioned something very, very close to me. The book is without demeaning the fact that, I am a complete virgin when I, read about finance. So thank you so much for being sensitive about these things when you're writing about for women. So with that, I'll quickly jump into the questions. And once again, if you have a follow-up question, please do raise your hand. We'll try and take it up. We have a total of 16 questions, ma'am, that have come from this group and more. And let's get going then.
Sure.
And just so that it's simpler, I will bring the question on the screen. And so the first question is simple. What was your motivation to write this book?
So the motivation was people like yourselves, because as a journalist in the genre of personal finance, this is something I did as a profession for years and years. But every time I would speak at a public gathering or at an event or answer questions on television, that was one thing that my audience always told me, that, when you tell us, it makes a lot of sense, but is there a book that we can read? And my understanding was that there wasn't a book which was an entry-level book to finance for Indians. So you have a whole lot of work which comes out of the West. But I find a cultural difference in the way that we approach money and the West approaches money. There's a lot of difference in our value systems and there's no moral judgment. That's how it is. There's a deeper difference in the way that we approach money. For example, there is a very famous book where a biological father is sort of dissed because he's the poor father, and the rich father is somebody who the author aspires to be. Now, can you imagine in an Indian context, anybody writing a book which talks his real or her real father down? I mean, this is not in our culture. We don't do these things. And so there is this deeper issue, the dissonance I felt with a lot of culturally noisy things. I mean, I just felt that I couldn't swallow some of those things. That was the deeper part. And the other part was also in terms of there was so much of emphasis on debt management and cut your credit cards, do this, do that. There was a whole lot of focus on debt. Whereas the Indian story is very different. We do savings very well. It's the conversion of savings to investments that we struggle with, isn't it? So our problems are different. Our context is different. Our financial products are different. Where was a Western book telling us about public provident fund? They're talking about 401k. How is that relevant to me in my life? So these are the few things. One was the ask from the audience, and the second and probably the larger reason was the fact that there was nothing servicing us as Indians. So which is why the book has been written in the manner that it's been written. It is a book by an Indian for an Indian audience, using the Indian context, using Indian examples, even in terms of food. A lot of they will of course talk about their contexts, but when an Indian is writing in English, why am I importing their sort of food or weather contexts? Why will I, when it rains, we like it. So it's a lovely rainy day. You'll never hear it's a lovely rainy day coming out of the West because they don't like it. It rains all the time. Or being warm at home in a country where a lot of the country is in summer most of the time, being cool at home. So there's small, very, very small nuances which I felt needed to be corrected in an Indian context. So it goes far deeper than money. Money is of course a part of it, but also a book on finance with the Indian context, with the Indian products for the Indians. That really was the motivation.
And I think we thank you for that, because you're right. We've read a couple of books, and I know, Sheetal, when you were, we read a lot of books, but it was always about 401s, etc. So yes, I think the motivation came right on time, ma'am. We'll move on to the next one. I'll just quickly take over. The next one is, how do you think the new generation of Indians see money differently than their parents and grandparents? Because we are still, I still call myself young, right? I mean, people who are in 30s and 40s, we can still change the way we are looking at money. But what about, what do you think the next generation is looking at money as?
So the generation of the parents and the grandparents, and I will put myself in that generation because I grew up in the 70s. All right. So my childhood was part of an India which was a socialist economy. So I have personally stood in lines in a middle-class home in Delhi for water, for milk. There wasn't anything. Like there just wasn't anything in the, there was stuff, but poor quality. It was a supply-starved market because when you have politically, when the choice is socialism, you starve the people out of opportunities, out of products, out of income. So I call my cohort, my generation cohort, we are the scarcity mindset people. Because we grew up with scarcity so deeply ingrained, we didn't know that there would be such a big boom after that 91 reforms. So 91 reforms was that watershed which allowed entrepreneurship, which allowed businesses to bloom, and which finally we are coming to a point where profit is a fantastic word. It's not a bad word at all. I mean, we grew up with this idea that profits are bad, businessmen are bad. No, they are wonderful people, because when they make big profits, they employ more people, people can get jobs, have lives. The generations born 10 years after 91, so literally starting from the turn of the century and the millennium, I call that generation, the millennials and the Gen Z, I call them Indians with a wealth mindset. Other than the stories that we tell, they have no idea. And remember that after the 91 reform, there was a giant wave of growth which lifted all the boats. So 300 million people did well, so it changed lives, it changed the future. This generation is looking at the world very differently. So just a very small example of the attitude of parents to start up, their children trying to do startups. When we were growing up, this wasn't an option. You had to get a job. You had to stay on with the job because it was survival. You just had to survive. The parents now are fairly well off, and they're giving their kids this lifeline of saying, go make your mistakes, try something out. So the number of startups that you see, like every young kid today is dreaming of a startup. Out of 100, maybe one will do well, but that doesn't mean that this child has not tried to create wealth. I mean, being rich is good, isn't it? Why do we want to distribute poverty? We should all be rich. So this whole discomfort with money, I feel, is beginning to dissolve. How we earn it, what we do with it are personal choices. But for this generation, it's a very different story. Of course, there'll be caveats that be careful of debt, be careful of, essentially be careful of debt, whether it's at a personal level or in a business level. The best of businesses get wrecked because of debt. The best of lives get wrecked because of debt. So debt is something that this new generation must be careful about. But in terms of the desire for wealth creation, I think it is, for me, personally, it's very heartening to see the newer generation being so confident about the future.
Yep, and I think you said something which is, be careful of debt, because it does ruin a lot of things. You not just businesses or your bank balance. You're talking about relationships and everything. So I think, yes, that's something we need to be mindful for. I'll just move on to the next one. How do you see the products changing? The way young Indians are now looking at money.
Look, financial products, the industry will continue to innovate. But the base level of financial product remains in the three asset classes of debt, equity, and real assets. Real is gold and real estate. You can add commodities, you can add other things to the basket of real. But in an essence, the basic split between your asset classes, that doesn't change. What kind of innovations come, what kind of products come, will depend on both the regulations and the industry responding to those regulations. But for a retail investor, the ideal is to keep your personal finances very simple, because the more complication there is in a product, the more opacity they build in, the more difficult it is for an average person to decode what happens when things go wrong. And especially in the manner that they are sold, they talk up the good parts. They never tell you what happens when things go wrong. So I would say that we will see plenty of innovation around, especially the index funds in India. That it's just starting the sort of innovative products coming around indices. But for an investor, The idea of an index fund is to get the average market return. If you want to introduce the risk of a managed fund in your index basket, this has to be a decision done very carefully, because when you do indexing, the idea is to get an average return. But when you start building indexes on some complicated maths, algorithms, derivative products, then you're introducing a whole lot of risk into what you somehow think is a risk-free product. We saw the same thing in the debt fund category, where people assume that debt funds are very, very low risk, but then there are a whole lot of risks which come within debt category of interest rate risk, credit risk, liquidity. And we saw some of these things playing out. So as investors, we have to be very careful that when we take a conscious decision of choosing an asset category or a class of products, that we don't stray away from the base logic of that product in the hope of getting some return, extra, little bit more. Right? So we have to be, as investors, we have to be very, very grounded into the basic rules of our own investing journey. The products are going to keep coming. And I'm hoping somewhere there is a little bit more attention on the manner in which these products are sold, in terms of how suitability metrics and suitability requirements are built into the sales process in banks and insurance, so that no matter how complicated the product is, the person selling it becomes his or her responsibility to ensure that you as an investor understand the product, understand the plus and the minus, and then you invest in it. So that's the way that I see this piece playing out.
Yes, I think that's a challenge today. The bank RMs are more into selling the product than making sure that, people like us understand. So I think, yeah, that should really help us move along, getting good products for ourselves. I'll quickly move on to the next question. I think this is very core to all of us who are on this call. What is currently missing in us making Indian women more financially literate? I mean, taking charge is one thing. Today, we don't even have women who are aware about what they can do. So what in your experience is it that, what is missing? And I think when we acknowledge what's missing, we'll be able to plan for what we can do about it.
I think the first thing which is missing is the environment at home. Irrespective of education levels, there is still this idea that boys do better with big money decisions. So somewhere we need to change the home environment. We have to bring up our boys better in terms of learning to share work at home, not help out, but share work at home. So that becomes a key gender conversation, where it begins really in the home, where we bring up our children differently. We give the girls confidence that this isn't tough. You can do this. You must empower yourself with understanding finance, money, numbers are good. So there is a social subtext to how we change this. There is also, especially in business families, there is this idea that assets go down the male line, where while the law, of course, gives equal share to the girls, but most of the times when the business assets play out, that's not how it works. So somewhere I feel that keeping the girls out of the money conversation in homes is more deliberate than just this idea that they don't understand. Is also to keep the assets away. And this is something that I say over and over again, that you need to ensure that assets are either in your name or in joint names. So when we're talking about financial literacy, we are moving from the journey of the home, the reasons behind the home, and then finally to the women who somewhere I feel take pride in saying that I have no head for numbers. I don't understand this. It is too complicated. Mujhe nahi samajh aata. Somewhere I feel there is this thing, I'm too cute to know all this. You're not, and you harm yourself when you think you're too pretty or too cute or too cool to dirty your hands with something like money. There is this moral judgment which comes in. you're essentially harming yourselves. So even like, obviously this excludes this current group because you're trying to empower yourself. But when you talk to the larger, the little girls in the extended family, your friends, you will probably hear this very often that, oh, mujhse nahi hota, it's too tough. I think that's our problem, that we need to get over this thing that it is too tough. It is not too tough. You can manage an Indian joint family, you can do anything in the world, isn't it? So, so give them that confidence. I mean, you can do anything. You can drive a car on Delhi roads. Oh my God, you can do anything in this world, right? So, so one is the structure of how the conditioning is done. And then there is the conditioned woman who says, I can't do this. So even if you're doing a fixed deposit, I'm saying, okay, you don't have the confidence today to go to more efficient products, but at least you're doing something. So I always say there's no shame in doing a fixed deposit, as long as you know that it's not the most efficient product in terms of long-term wealth creation. It is not, but it is better than doing nothing. And from then on, if you can then equip yourself, learn, and then move to products more suited for long-term wealth creation, that's the right route. But to constantly give the confidence that at least do something. Don't just leave it, do something. So mix of things of the environment and how women respond to that.
And I think what we can do is, as mothers, we need to ensure that we bring up our sons, right? Like you said, that, they should be stepping up and sharing the knowledge as much as the work as well. So yeah, thank you for that takeaway from this question. Yeah. The next one, moving on to little a question on a product availability, ma'am. We recently completed, as a community, we meet every month to discuss what's happening. What is it that, we can do to support other women in our community? This month we connected and we were discussing something about the senior citizens. One of the questions that kept coming up was that, in today's time and age, what is it that senior citizens can do? Because, the rates are falling, the FD is not giving that much of a return. Everything else looks to be, a long-term income generating product. What is it that you can recommend for senior citizens today that they can probably utilize, from the bouquet of services that banks and institutions have to offer?
So in fact, at the moment, rates have gone up a whole lot because RBI has been increasing rates. Inflation was about, I think, 7.5. So always interest rates will keep pace with inflation. So today, you are getting 8% returns for senior citizens in many banks. There's senior citizen savings scheme where a 60+ person can put in 30 lakh now, I think, after this budget. So for a couple, it becomes 60 lakh, and that's 8%. So in terms of locking in now and in the next 3 to 4 months at these high bank FD rates is a great idea for senior citizens. But this is not going to help them for their future needs, because inflation builds on top of the previous inflation. So we can say that inflation was 7, it's fallen to 4. But this 4 is sitting on top of the 7, in the sense prices only go up, they never go down. But if the money, the retirement money of the senior citizens is not seeing growth, when the capital is not growing, they will run out of money at some point. So there are several options, okay? And it's a very, very difficult conversation with the children and the parents, but sometimes it's nice to get somebody outside who understands both. So if you find that parents are beginning to run out of money, in the sense that you notice that they are not doing what they used to do, the quality of life is suffering, the medical bills are too heavy. One is that most of these people are asset rich and cash poor. So one is to sell the larger house, move to a smaller city. Again, for every family, these things will differ. So the idea is to get cash in hand. And if there is a lot of people, especially of the cohort which is 60s, 70s, they're sitting on a lot of useless real estate. Uske liye flat kharid liya, uske liye plot. These are useless assets because you are asset rich and cash poor. So I would say consolidate. Just guide them into saying you need at this stage a better quality of life. You need to be able to travel when you want to. What use is that flat? What use, unless they're living off that rent, so when I'm saying something, there are a whole lot of caveats that you have to put in depending on the situation. But I'm just throwing ideas that collapse all of the real estate into the one house that they live in, and the rest can be put into a mixture of fixed deposits and really a hybrid mutual fund which has 25% equity, 75% debt. I wouldn't even worry too much about the whole taxation piece or whatever, does not matter. At least with that 25% equity, my capital, part of my capital will continue to grow. Ideally, there should be a part of their portfolio should be maybe in a broad market index fund, like on the Sensex and Nifty. But you will need good advice to help them onboard these products, to trust them. So that is one. Now, there are situations where they really do not have the money and the children are supporting them. And there is this tension in the family because of that. One way to do it is to say that these are not easy conversations, remember, but is to say that, look, whoever the siblings are, we will inherit the home, whatever the asset is. So you write the will, and this stream of income we can start giving to you. So it's very transactional, but it preserves their dignity somewhere, I feel. That it is not a freebie they are getting. There is this, the asset is going to transfer in any case, isn't it? So, but if there is a genuine problem of income, and remember, somebody who's 60 today is going to easily live to late 80s, 90s, even 100. There is 30, 40 years ahead. You have to prepare for that. So I'm looking at your faces. I know that most of you will have parents maybe in the 60s or 70s. These are very important conversations to start having, and they're not easy conversations. But to bite the bullet and do it.
तलवारें निकल आती हैं कभी-कभी ऐसे conversations में, right? So
it's very difficult. It's not easy, but for their dignity and everybody does want to help. I mean, most families, there is this desire to help the parents, but it becomes a very difficult. There's a transition of power which happens in generations, and this is that moment when that. And look, money is about power. So when you are getting into that position of power, the onus is on you to make it as dignified, as beautiful as you can.
Makes sense. Thank you, ma'am. We'll move on. This is a question that we got from one of our very active members, Ashika. This is about NRIs, that, while we have the money, but we don't really know where to invest it. And most of the times, when dealing with banks and brokers, it becomes very difficult because they have their own criteria and the way they communicate, etc. So do you suggest any checklist or key things when which one should look out for when there is an investment getting done for NRIs?
So there are two categories of mutual fund intermediaries. One are called distributors, we all know, and one are registered investment advisors. The number of registered investment advisors are few, but there are very large distributors who have set up excellent practices, and many of them have overseas clients. So they will help with all the paperwork, they will help with all of the investing, they go beyond mutual funds, especially the registered investment advisors. The hesitation is in willingness to pay. So if you're with a distributor, they take it off the commission that the company gives, mutual fund gives. And for an RIA, you have to give a separate You have to pay a fees. That fees is going to be worth it because of the sort of service you get. And how do you choose a person? How do you choose a doctor? How do you choose a lawyer? You ask your friends and family, you ask for past experiences. There isn't a place where these are ranked or rated. So you will have to find out from your network who are the people who have done well by their customers, by their investors, and then be willing to pay their price to help you, the NRIs, start investing into India. Because look, we are one of those shining lights in the world today. We are growing at a time when the rest of the world is deeply in trouble with inflation, with recession looming, with bank failure. We're not looking at bank failures in India, not by a far shot. So we've done very well over the pandemic in terms of managing the economy. So there should be a lot of NRI interest into not just real estate. Real estate is still very messy in India, into financial products like typically mutual funds. And they should come through the route of a good full service mutual fund distributor or an RIA. Banks, unfortunately, that service part is not that well regulated. So RBI, as a keeper of executor of monetary policy, keeping inflation in check, providing liquidity, the big stories RBI does very well. But it's not that good when it comes to regulating banking staff in terms of selling products. So I would be very careful in trusting bankers when they suggest products. They are typically mostly maximizing commissions. So the route should be through either a RIA or a mutual fund distributor.
I think Ashika, you want to add something to it? Would you like to go? And I'll just request you to just keep it in 2 minutes.
Yep. Thank you for answering that. So what I was looking for is like, your book and the questions that you have on it, the checklist for every product, the term insurance, the health insurance has saved me in multiple situations. And I've been able to prove myself to my parents that, I know what I'm talking about, and I've saved them a lot of money as well. So if in future, if you're writing a book, I would be, interested and curious to see that, if something comes up for NRIs as well.
Okay, so that's a great idea. I mean, I think there is enough to be done for NRIs in this space. I will definitely make a note of that. Thank you.
Thanks, Ashika. And I think that's a wonderful idea. With that, we'll move on to the next one, which is a simple question, but I think we all can do a little bit with your advice here. How do we raise financially savvy kids? Are you doing something for the kids?
Okay, now I'm going to put on my parenting hat and tell you that kids don't do what you tell them to do. They do what they see you doing. So you are their best role model. So if they see you leading financially savvy lives and you start including them in conversations about money, they will learn this on the way. Okay. It's very important for them to understand consequences of decisions. So whether it is a choice between buying, say, a gadget today, or the value of this money in 10 years, which could fund maybe a foreign education. So the decisions of what should we do, like this is required. You say you want the next phone, whereas the upgrade is just for peer pressure. This phone is working just fine. But if you are upgrading your gadgets because of peer pressure, then you have no voice to tell them that this is not okay. So you have to first walk the path of, do I need it? Or it's just because somebody else has it and because it's there in the market, because it's shiny and bright, I want it, I need it. So if you live it, then it's easier for you to do the parenting piece and say, look, it costs this much. And at 14% broad market index in 10 years, this 1 lakh is worth this. So do the numbers, tell them this is going to be worth this much. Always, I would say, keep pushing the consequences of decisions onto them. Show them the choices, that this road leads there, this road leads there. And literally, you should start choosing. So I have to share a story which I had forgotten. And my daughter, she's now all grown up, but she reminded me that there are all these second-hand books, and especially in these like PVR Saket, PVR Vasant Vihar. They have these stacks, 50 rupee books, second-hand books. And there's also bookstores which sell new ones. And she would have been around, what, 7 or 8. So she remembers me telling her very clearly that this is the money, you can buy 3 old ones, and the same money will buy you a new one. And I was saying that, look, there's no moral judgment. I mean, if you want the new one, that's fine. It's really your decision. So I don't remember. She remembers I was very careful not to indicate that one was preferred to the other, like 1 new book or 3 old books. So I also said, look, old books might be dirty and they might be used. Maybe something is torn. We don't know. The new book is going to be new. But here you're getting 3, here you're getting 1. So, it's a trade-off. So she tells me, I heard you. I had already decided, but I let you speak because mom speak. Of course, I was going to buy 3 books, So I think the idea is to constantly give them choices without indicating what is it that you like actually. So, and those small stories will build up their confidence into making much bigger choices.
Well said. I think that's where we need to control the judgment side of being the mom.
Yes.
Yeah.
Yeah.
That's a tough one. We'll move on. We have one of our another very active members who asked a question about home insurance. Rajay, I'm not sure if you're there on the Zoom still. What do you suggest about buying a separate home insurance for people who do get recommended?
So home insurance, am I understanding this correctly? Is it a insurance to protect a home loan or insurance to protect the things in a home?
Rajay, would you want to elaborate in case you're there on the call?
You can unmute, Raji.
Yeah. Thank you for taking up the question. Yeah, so it's basically to protect the things at home, whether it is in terms of theft or floods or anything else. So that's what, because home loan, sometimes some home loans itself has some part of insurance. So once you're out of the home loan, there are still a few financial advisors who keep coming up about home insurance, who say, okay, it will help you to protect your home. So not much of reading I've done, because nowhere people point out much on home insurance. It's more on the personal, medical, and the term insurance is what, even in your book, it's been brought up, right? That's why I just wanted more clarity there.
So look, home insurance is important to the extent that there can be a catastrophic event like a flood or an earthquake. So you have to really, like, for example, I don't think Delhi has the problem of floods, but we discovered that Chennai did, when that whole Chennai flood story happened. So if your entire house is going to get wiped out, that insurance is going to come in very handy, because you will get money for things destroyed by a catastrophic event like a flood. The second part is that a home insurance also insures your jewelry. So the jewelry which is in the locker is not insured. So if there's a theft, somebody breaks into the locker, the bank will give you, I think, 3 times of the, or 30 times of the annual rent. There's some new RBI circular which says that you get something, but nowhere close to the value of the jewelry that you might have. So in my opinion, if you are home insurance would be against 2 things: catastrophic event, like for example in Delhi right now, with all the earthquakes, especially if you're living in a high rise, maybe that's a good cover to start thinking about. And the other thing is the insurance of your jewelry, but that becomes a difficult and a longer, not a difficult, it's a longer process, because you'd have to get it evaluated. There are government appointed evaluators who stamp what the jewelry is, what the weight is, what the value is today. And then you pay a premium. So if in case there's a theft, like even in your home, then you can say, look, this is the certified list of jewelry, and the company is supposed to reimburse that, what you have lost. So see, gadgets and all, what happens is they depreciate. So, I mean, I've had home insurance for a long time. I've never made a claim. But just for that jewelry piece, I like to keep it alive. That because the rest of it is hardly anything, the big part of the premium will come if you buy a very solid policy which gives you the value of your home should the whole thing collapse. Okay, there's a particular term for that insurance, but imagine there's an earthquake and the whole building collapses. You literally have nowhere to go. What are you going to do, right? And it's going to take money and time for the house to get rebuilt and all of that. So it depends on the risk perception that you feel of such an event. So if you feel that, if you believe that this is a real big risk, this earthquake destroying my entire, then those insurances are probably needed. And then insure your jewelry. Because the rest of it is like books and all. Yeah, I mean, it's an emotional loss more than anything that the money will bring back. Even the gadgets and all. After 4 or 5 years of depreciation, you get very little insurance money back.
Yeah, thank you, ma'am. That helps.
Thanks, Raju, for the question as well. I think we all learned something from it. We'll quickly move on. The next one is actually from one of our very, very, very active members, Sheetal herself. It's about what women can do in corporates to bridge the gap of the retirement wealth, and how can the companies actually support the employees? Because right now there is so much happening for women, quote unquote, empowerment, but we still see that pay gap and the way women are behind schedule in the financial literacy as well. So what do you think can corporates do and women in corporates do to bridge their future retirement wealth?
So the women will retire with less money for a variety of reasons. One is the pay gap, and that is for women to also push for better parity. We also don't ask. We are also always on the back. So it's a gender issue, really, that we don't like to ask. And the man is overconfident and will ask for more. So even if he gets a little less, he's better off than where he was. And what a lot of women say, it's okay, I don't like to talk about these things. I'm sure I will get rewarded finally. So I think our own attitudes towards parity and not parity, if you're doing better, more have to change. We should be on the front foot saying that, look, where is the difference? Why am I not getting what I understand somebody else is getting? Or why am I not chosen for this work? So I think it's also up to us to step up. As far as retiring with less money is also because of things like baby breaks or a break when somebody is ill at home. It's usually the woman who takes time out, and your money does suffer. So again, these become very difficult issues in families, is that if you are the one taking a break, then it's a good idea to negotiate, to say that I need this much of money. So I am taking a break from work to, I don't know, spend 1, 2, 3 years with the baby. In this time, I need X thousand rupees a month for my own self. Okay, so I know of a woman who asked for 1 lakh a month to give up her job. Her husband was a consultant, could afford it. But she said, I need my spending money and I need to continue my savings. So all marriage is a negotiation. So this is another negotiation to say, we want to do this. As a family, we want to do this, but I need this much of money every month. So that I want to ask you, plus out of that, I will continue to do my savings. So it's not easy, but when we know that there are other women doing it, and I know of a woman who asked for and got that 1 lakh, everything else is paid. You're paying all the bills, but this is her personal money on which nobody can ask what she's doing with it. So whether she spends it, whether she saves it, it's up to her. So every family will have different levels of what 1 lakh, 5 lakh, 25,000, I don't know, whatever it is that works for your family and economic situation. But that money which nobody asks you what you're doing with it is a part of the negotiation before you take a break.
I think you're right. I have recently started being vocal in my office with my boss, and I was like, I don't give it dash. But yeah, I think we are going there. I don't know. I mean, I keep telling younger women employees I work with that, speak up. I mean, and like you said, we expect things to be given on a platter. Ki maine itni mehnat kari hai, and we end up doing so much of admin task, and we, want to be awarded for it for some odd reason. I don't know why. But yeah, I think you're right. We need to start asking for it.
No, we're looking for approval. Somewhere I feel
Somewhere
that it's so deeply ingrained that looking for approval, that has to somewhere get out of our heads. That, yeah. So without being boorish, without being, there's a way to do it without losing your own dignity.
Absolutely. And without demeaning the other person as well,
Correct,
right? So,
correct. So if each one find your way, but it's important to speak up, to ask, to also not look for approval all the time.
I'll move on. And the next question is coming from Raji once again. It's about the ETF, learning that we got from the book. And we have many ETFs here in India. Are we going to be considering all are safe, or would you suggest some methodology for us to maybe understand which one would be safer for us to invest in for ourselves?
So, as finance is not static, and I also constantly learn as I go along. So in the next book, I've made the distinction that exchange traded funds and index funds do the same thing. But for a retail investor, you stay with index funds now in India rather than ETFs. ETFs are more suited to the trading mindset because you get a price at every moment on the stock market. These are listed. But because it's listed, there has to be a counterparty who's buying when you're selling. Whereas an index fund, the mutual fund is supposed to buy and sell as many units as the investor wants to buy or sell. They have to make the counter trade. So the counterparty is the mutual fund who's supposed to create as many units as you want or to extinguish as many as you are supposed to sell. In an exchange traded fund, there has to be another investor on the other side who's buying when you're selling, who's selling when you're buying. So you can have liquidity issues in an ETF. The advantage that ETF had when I wrote the book was that they were substantially cheaper than index funds. In these 5 years, we've got index funds which are now offering very competitive expense ratios, 15, 20 basis points. So that's the first piece, that index funds have really stepped up. The second piece is there are, I think, more than 80 index funds today. And they are, so what is an index? Index is anyone can create an index and you can float a fund on that. When we say index funds for long-term wealth creation, we're talking of the Sensex and the Nifty 50 as a broad market index. So the core of my equity portfolio, like half of my equity portfolio, instead of a large cap, is in a broad market index, which is only these two indices. So there are, I think, 7 or 8 funds or more, maybe 10 funds, which track these two indices. And if you're looking for a fund with a low expense ratio and low tracking error, the data will come out at you, which is the 1 or 2 out of which you can choose one. So for the bulk of your equity investment, half of your equity investment, stay with a broad market index like a Sensex or a Nifty 50 index fund. I would caution you against buying exotic index funds because you don't know what the underlying is. You may not be able to understand it. So be careful, because they are going to come out with more and more index funds in the next few years. And the sales pitch always is that you get a better return, but better return comes with more risk. And when I think of my equity portfolio, I need at least half of it to be in very low risk. In the space of equity, I want a low risk equity fund. I can take my risk with a quarter in a small cap, a quarter in a mid cap, but half of my money I need in a lower risk equity product, which is a broad market index fund. So you structure your risk so you take risk in a part of your portfolio, not the entire portfolio. So you use index to give stability to your equity portfolio. That's how you use indexing.
Raji, I
Yeah,
hope that
thank you,
helps.
ma'am. Yeah, and one other thing, actually, I was looking at, even there are gold ETFs also, right? So
Yes.
I did invest, and later on I started thinking, will I have liquidity issues if I continue doing, or should I relook at it? So
I think with gold, I think there is enough. I don't think liquidity becomes a problem in gold ETFs. You have a better product today with the sovereign gold bond, because it gives you an interest. And with that is that there is a 7-year lock-in. So you have liquidity problems, it's a lock-in. So unless you start buying today and you buy one every year, from the 7th, 8th year, you have one gold fund, sovereign bond fund, which is maturing. So then you get the liquidity also. But ETFs do very well, gold ETFs do very well in terms of liquidity. And there's a very small expense ratio. With the sovereign gold bond, there is no expense ratio. You're buying, you're getting an interest, and you're getting a long-term tax break as well.
yeah. Yes, ma'am. Actually, whenever SGB is available, I invest. Rest of the time, I put it aside in the gold ETF because it's not available all the time. And
That's
also,
right.
in
That's right.
case if we want liquidity, yeah,
You
ETF is
can-
what I can
Correct.
go for. Yeah.
Correct.
Thank you, ma'am.
Thanks, Rajay. I know we are short on time, and I wish this was a longer conversation, but I just have two last questions, ma'am, left. And I think the last one is an important one. I mean, this one, which is coming up now. Again, from Raji, this is about her daughter joining in college in another city. And while she does have a separate account to manage her expenses, we are still trying to figure out the monthly budget for her. One of the many challenges is to limit, of course, the wants. I think with freedom comes the want as well. Any guidance on how can we handle this a little better? Can we, how do we empower her, but at the same time, I think, help her ensure that she learns the
It's
finances
always
as
a
well.
tough one, no? And you want to do the best for your kids, and you don't want them to feel the peer pressure. But peer pressure is something, there's no end to it. You can completely go on, it's a black hole when it comes to peer pressure. So I think I'll just tell you what I would do is just have a budget in mind, a reasonable budget, and say, this is what you get. You've just got to manage your month in this. And I would be a little hard-hearted, and if the kid oversteps, don't rush in to help. Let them figure out that let them experience what lack of money means. Because for a whole cohort growing, they have never experienced a denial of something because the parents do have the money. So these are growing up lessons. You just say that adulting is fun, but adulting comes with responsibilities, and it also comes with managing your money. Give them, let's talk money to read. And I think put them on a budget. And again, it'll be reasonable for you'll have to see. One is your affordability. How much do you want to spend on the kid at this point? And just drop a reasonable budget. Look, this is all that there is. I'm paying this much. This is my monthly expenditure on you. And I literally cannot do more than this. So sometimes what we do is we overpromise when they're growing up that you don't need to worry about money. Papa, mama are here, we will manage. The idea is to build up this money awareness as you bring up your kids, that it's all hard-earned money. It's not to be squandered away. So I would put the kid on a budget and let them have a couple of difficult months and not rush in to extend a credit line.
Yeah,
And I
actually, I tried the budget part of it. Sorry, I think if it's out of time, Garima, please go ahead.
just please complete your thought, Raji. That's absolutely fine.
Okay, so yeah, they're smart, right? So yeah, mom is not giving, okay, I'll try with father, I will try with granny, all those things happened. Then finally, I told everybody at home, let me manage, right? If everybody starts trying to give offers. So it's again learning. It's only 4-5 months. It's a fresh experience. All of us are learning. So that's why I thought, since in your book you were talking about daughter, immediately that picture came into my mind. Okay, so there are people who have gone through this. Probably I can take some guidance from that. Yeah.
No, absolutely. And it has to be always a united front. They cannot play one against the other. I mean, absolutely not. I mean, they get into serious trouble in my home if they try and play one against the other. Okay, there are consequences of playing one against. You do not do that. That is out. You are out of line. It's not to be done. So yeah, it's tough love.
Thank you so much, ma'am. I know we are short on time, although I would have loved to take one more question. But I will leave it to you.
Why don't
I'll
you
just pick up one question? Yes. This is a question that I got from the chat. How do I guide my son who has just got a campus placement to invest his money? So we're talking about a young guy.
Yeah. And again, all the IITs, the IIMs, they do everything other than prepare these kids to look after their first salary. I would say pay back all the loans. Suppose there's an education loan, that's your first thing. I would say make that 3-account system immediately. Start practicing separating savings and spending. Just implement the first few chapters of Let's Talk Money, just for the first 6 months. And also because it's a very hard ride for these kids to do the placements, to do the studying and to get the salary. So build in 6 months of zero savings. Just spend, buy presents, do whatever. And as a person, as a responsible parent, I'm saying that do 6 months of total dhamal with your money. Who cares? You've got for 50 years to earn, but do it consciously. That for 6 months, no holds barred. I'm going to spend. I'm not going to take debt, but I'm not saving a single rupee. But cap it at 6 months and start off your cash flow management. So create the accounts. So because you've waited long enough for this money to come, so get this thing out of your system a little bit. They immediately, I think the first thing that they want to do is buy gifts for the parents. That's how we bring up our kids. That's the first thought. So allow them that luxury of doing all of that, but also say that, get it out of your system, but in 6 months, you should start saving. You should implement that 3-account system. You should have something going into your invested account. And then you can start building your emergency fund. You can start thinking about your investing journey a little later, because as the first year is coming to an end, they'll have to do the tax saving. So instead of buying an insurance policy, to start just a PPF account. Those are really good friends for a long time. So just start them on a PPF account. So you just, and then once that habit of the 3-account system sets in, then they're able to negotiate the split between the saving and the spending.
Yes, let the shopping begin. Deepti, I hope that helps as well. Thank you so much, ma'am. Just one last question, a thought. What is one thought that you want to leave us with today that we all can take back with us?
No, one thought is that I'm delighted that women are so motivated that you're all getting together and you're solving these problems. The one thought is I think you need to spread it now. So you are empowered. You're already doing something about it. Just spread that light. Just get other people to put on their oxygen masks of money.
You can do it, ladies. Let's get that done. With that, and I know there will be many more questions, feel free to drop your questions to myself or Sheetal. We will try and get some answers if possibly we can. If not, we can all reread, and we look forward to the new book that you are getting launched as well. And yes, Seema, we are gifting the book away to our nieces and daughters and friends and girlfriends and everyone, of course. With that, a quick one. If we were in a cafe with a cup of coffee, we would have loved a picture with you, ma'am. So if that is okay, if everybody can get onto the video, put on your lipsticks, and let's get a quick picture with. And Chital, I think you will have to do that. For some odd reason, you are better than me in this.
Do send me the picture, okay?
Yes, I will do it. Thank you.
You all have the book. We can hold up the book if you have.
Some of us should have the book.
Okay,
Let me
I
just
have my
start.
copy. Okay, do send me the picture, Sheetal.
Yes, yes, definitely. Okay, so we're ready. Take one and smile. Okay, we'll take one more. We'll take one more. Okay. Tripti, Shobha on the screen. Where did Tripti go? Okay, Tripti is getting a book. Okay, great, great. Can see everyone. Okay, smile, everyone. Super, super.
Wonderful. Thank you.
Thank you so much, ma'am.
All right, bye.
Thanks.
Thank
Take care.
you.
Bye. Thank you so much, everybody else, for joining in. I hope this was worth the wait. And we'll continue with our next book next Sunday. Let's catch up. Have a good week ahead, everyone.
Bye-bye.